Let's have a look at the bearish base. I've identified a key daily 4-hour resistance zone, as in the previous examples. I like to trade this pattern on a 1 or 5 minute chart, but it can be traded up to sort of a 60-minute chart with relatively small risk. And what we're looking for is we're looking for price to approach our key resistance area. Once it hits the level, we're looking now at a smaller time frame, we're looking for price to react off the area. We're then looking for that area to hold as resistance and a leg down. So if we have a look at our area, we have an area of resistance becoming support, and then we're looking for price to hold as resistance. So we've got minor resistance and support level, and then the major level, and it's at the major level where the institutional flows come into the market. So we're using this smaller pattern to reduce our risk and a way to get in on the higher time frame levels. So it's at this area right here, resistance, support. We're looking for resistance to hold. We're looking to enter on a retest using a limit order with a stop loss just above the highs. Price rallies up into resistance and we see a nice little reaction off the level. We then look for previously broken support to now hold. If that level holds as resistance, we can start reducing our risk on the trade. And we look for a move down. Here again, we want to target a higher time frame level. So this could be intraday low or the previous day's low or Fibonacci number, so that we're getting a good risk reward on the trade. As with all the other patterns presented in this course, I did not come up with them and need to give credit where credit is due. Let's take a look at the head and shoulders pattern. It's been around a long time and is found in most textbooks. I first encountered this pattern in one of Larry Pesavento's books, where he discusses how to trade the pattern in a similar manner. As with all the other patterns I will be discussing in this section, all entries are on retracements using limit orders. Do not try and chase price if you missed your entry. Having a look at the head and shoulders, which is the first pattern we'll be discussing, we can see we have a key level of resistance. In section 2 we discussed how zones are created, and we're not looking at specific numbers or levels. Now these zones I like to look at and find them from the daily and 4-hour charts. We have price approaching our key level, and you can see we have a nice uptrend where we have higher highs and higher lows. What happens in this instance is we have price drive up, come just below our level where we have different orders stacked, and what happens is we have the first block of orders getting taken out, which causes price to fade. You can note the uptrend with higher highs, higher lows, and a nice uptrend line forming. We then have price drive deeper, this time taking more orders out in this block or this resistance zone, and you can see this high on the left is taken out. When that happens and we start to watch price move off this level, we want to watch to see if we can get price moving below this trend line. Here you can see the trend line is cracked or broken, as well as price making a lower low. So this swing low right here was taken out. So we came up in an uptrend, we drove deeper into this resistance area before fading, breaking the trend line and making a lower low. Now the important thing to note here is this level right here, this area of resistance. That dealing point is the most important reference point for me in this pattern, and very often you'll find the back end of the trend line will line up with this area of resistance. So the back end of the trend line lining up with that area of resistance. So that's the most important level to be watching with the formation of this pattern. You'll also notice very often we have a fib retracement lining up with that level, anywhere from a 618 to a 786, and sometimes the 886, which is a very deep retracement. And price moves to the downside from there. And if we label this, the left shoulder is the first area of resistance, the head is where price drives deeper into that resistance area, and then the right shoulder is where you're looking to place your limit orders. So you have an entry waiting at the right shoulder with a stop loss normally just above the head, looking for a move to the downside. And here you can see the left and right shoulder equal to each other, so that's the most important dealing or reference point in this pattern. Let's take a look at the inverse head and shoulders now, and that's obviously just opposite to the head and shoulders. So instead of having resistance, we now have support. So you can see the key area of support identified at the bottom here, again found from the daily or 4-hour chart. And in the previous example you saw price in an uptrend. In this example we have price in a downtrend. Remember, we're looking at reversal patterns here, and you can see we have lower highs, lower lows, depicting a downtrend. As with the previous example, you see price just coming short of our key support area, where we pick up the first block of orders, and we get a rally. You can see the downtrend here, and we have a nice trend line forming. So lower highs, lower lows. Price then drives deeper into this key area of support, picks up more orders, and we get a nicer rally. The important thing to note here is this swing high right here taken out. What we're looking for now is, once that trend line is broken, we're looking for a higher high, and we're now looking to reference this area of support right here. So as in the previous example where we had resistance, we're now looking at this area right here as a dealing or reference point. So that's the most important point in this pattern for me in this instance here, and very often you will find it lining up with the back end of the trend line. So we're looking to trade the level right here. Again, left equals to right, or that area of support, as the main dealing level. And if we add fibs in, very often you're going to find a 618 to 786 retracement, and less often, but still encountered, is the 886, which is a deeper retracement, and price then rallies off that level. So that's the area right there that you're looking to trade from using a limit order. Stops are placed just below this swing low, looking for a move to the upside. And if we label the pattern, we have a left shoulder, we have the head, and we have the right shoulder, and we're looking for the right shoulder to equal to that left shoulder. So that, again, most important dealing level or reference point in the pattern. Now that we've gone through all the patterns, let's have a look at something called patterns within patterns, and how we can use the different patterns inside larger patterns to find high probability trading opportunities. Here again, we start off by finding a key level of support or resistance from the higher time frame. In this example, we're looking at a key resistance zone found from the daily or 4-hour chart. Price rallies up and stops just short of our level. It then rejects aggressively. So once the orders come in, you can see offers coming in, we sell off just shy of our key resistance zone. Price in rallies and has a go up towards our high. The retracement is a 79% or 786 retracement. We then see another retracement down, anywhere from the 38 to 886 retracement. We could now potentially look for a possible butterfly pattern. Price drives up into our key resistance area. You can see the extensions forming the 127 extension and the 1618 extension. That would offer a nice high probability selling opportunity. price sells off aggressively, taking out the lows. Price then starts to retrace. Here you can see we get a retracement. It's a 618 retracement. Price then sells off anywhere from 38 to the 86 retracement, and then price has another go up towards our key resistance area, and you can see we have a 127 extension lining up with the 79% retracement. And if we have a look at the overall picture here, what we have is a left shoulder, the head. You can see the butterfly pattern actually formed the head right here. Price drove lower. We got a bearish Gartley pattern at the right shoulder of the larger head and shoulders pattern. So you can see how we have three patterns, two inside the larger head and shoulders pattern. So we get some very good trading opportunities here. Initially hitting key resistance, we got a bearish butterfly, price then sold off, and it formed inside the right shoulder a bearish Gartley, offering a very high trading opportunity. And if we just label this, we have a bearish butterfly completing at the head, and the bearish Gartley completing the right shoulder. Previously we looked at our retracement patterns, namely the head and shoulders pattern, the Gartley pattern, and the bat pattern. We'll now discuss the extension patterns. In this example we're looking at the butterfly pattern, and we're looking at a bullish butterfly. Firstly, we want to identify our key levels of support. As with all the other patterns, the patterns must be traded at key high time frame levels. So the levels found on a daily or 4-hour chart, that's where I like to find them. And what we're looking for is we're looking for price to drive down and fall just sort of short of this level. Okay, so initial surge down, we have orders. Remember, we have orders stacked at different levels, and we see a rally. So as with the head and shoulders pattern that we discussed previously, the initial thrust comes just short of our key level. What we're looking to do now is label this retracement X to A, and we're looking for a very specific retracement. From the XA swing, I'm looking for a 79% retracement. I'll show you why I'm looking for that exact retracement. We label this point B. We're then looking for a rally or retracement of the AB swing, and this can be anywhere from a 38 to 886 retracement. We're now looking for a drive lower. So you can see we've labeled this point C. We're looking for a drive lower and deeper into this order block or this key support area where we have orders stacked up. And this drive lower is an extension of the XA swing. So remember the XA swing, we retraced 79% retracement. It's now broken down, and we're looking for a 127 extension or projection of the XA swing. We also are looking for a projection or extension of the AB or BC swing, depending on how you draw it. And that's anywhere from a 1618 extension to a 2618 extension. In this example, we're looking at a extension of the AB swing, and you'll see the confluence, the 127 and the 1618 is the highlighted area where we're looking to place the trade, and that area we label point D. And the most important thing with this pattern, the way I like to trade it anyway, is that this area is located right inside our key support zone. If this is not a key support zone from a higher time frame level, I will not take the trade. The pattern itself can be found from a 5-minute all the way up to the higher time frames. I like to trade them anywhere from the 5 up to the 60-minute or hourly chart. And we're looking for a rally to the upside. So recap, we're looking for initial drive down. We label this point X. A rally to A retracement of the XA swing. The important number here is the 79 retracement of the XA swing. We're then looking for a rally or retracement of AB between 38 and 886, and we're then looking for a drive deeper right down into our key support zone or that order block to pick up more orders. The buy area, I will place a buy limit at the 127 extension of the XA swing, and the stop loss will go just below the 1618 of the A or the XA swing, sorry. So 127 for entry of the XA swing, stop loss just below the 1618 of the XA swing, which is not shown in this picture. Let's now look at the bearish butterfly pattern. Here again, as with the other patterns, the first thing I want to look for is the key area of resistance or support. In this case, we're looking at a resistance zone found from the daily or 4-hour chart. As in the previous example with the bullish butterfly, I'm looking for price to drive up towards the key resistance zone and then fade just short of the level. So as we described in section 2 with the order flow, with the orders stacked at different levels, we have orders coming in just below our key level of resistance, pushing price lower. On this initial move down, we label it X to A. We then look for a retracement of the XA swing, and we're looking for a very specific retracement here of the 786 or 79% retracement. We label that point B. We're then looking for a retracement of the AB swing, and this retracement we're looking for any from a 38 to 886 retracement. We're now looking for a move to the upside, and as with the previous example, we're looking for price to push right up, taking the X point out, or the highs at X out, and pushing right up into that key resistance area to fill those orders. Remember, orders stacked at different levels. We label this last little retracement C, and we're looking for this drive up into that level. And what we're looking for is we're looking for the extensions of the AX swing or the XA swing, 127 extension, to line up with the AB or BC extension or projection 1618 and the 127 extension or projection lining up, forming a very tight confluence. It's at this level right here, this highlighted area, we're looking to place a sell limit order. This is point D, and the stop loss will go just above the XA 1618 extension, which is not shown in this example. And we're looking for a drive lower. So recap, we identify our key level of resistance from the higher time frame, daily or 4-hour chart. The pattern itself is found anywhere from the 5-minute, I like it up to sort of the 60-minute, maybe even the 4-hour chart, depending on the risk. We're looking for the initial surge up, a retracement, which we label XA. We then look for another rally or retracement of the XA swing this time, which is very specific, 79% retracement. We'll show you when we go over the actual trade examples why we choose a 79 retracement, because the 127 and the 168 extension line up very, very tightly, forming a very nice confluence. And we're looking for a retracement again of the AB swing that we label C. That can be anywhere from 38 to 886, and then we look for a thrust up, and we look for a sell. The way I like to trade this is a sell limit at the 127 1618 extension, and I'm looking for a stop loss just above the XA swing, the 1618, which sits around here. Stop loss just above that level, and I'm looking for a move to the downside. Here again, as with the other examples, if the key level is not there, I'm not interested in taking the trade. Okay, very, very important. Let's take a look now at the bearish Gartley, which is the inverse of the previous pattern, the bullish Gartley. And this pattern I'm looking for at key levels of resistance. Once again, the key levels, these zones, are found on the daily or 4-hour chart. What I'm looking for is price to rally into this key area, picking up orders. Then want to see offers come in and price drive lower. On this initial drive lower, I will label X to A. They're looking for a retracement of the XA move down. I'm going to label that B, and this retracement is a 618 or 62% Fibonacci retracement. Then looking for a retracement of the AB swing, which we'll label C, and there again, this retracement anywhere from a 38% fib level down to the 886 fib level. So this retracement is not that specific. The XA retracement is more specific, so I'm looking at actual 618 retracement on that. What I'm looking for now is another drive higher, having go up towards that X point or that key resistance area. And this level right here is an extension of the AB or BC leg, depending on how you draw it, of anywhere from the 127 to the 1618 extension. And if we look at the retracements from X to A, we're looking at a 786 retracement. So we're actually looking for that confluence, as discussed again in section 2. We have a retracement, in this case the XA swing, and an extension, the 1618 or the 127 extension. And this highlighted area right here is where you want to place your limit order ahead of price hitting the level. And we're looking for a move to the downside. So this point right here, this highlight area, we label it point D. And the way I like to trade this pattern is a limit order at the 79 retracement with a stop loss above point X, looking for a move to the downside. Important thing with this to note is the key resistance area from the higher time frames. Let's take a look at my favorite pattern, the Gartley pattern. It was originally introduced by H.M. Gartley back in 1935. Larry Pesavento reintroduced the pattern in the 1980s, and more recently Scott Carney, one of Larry's students, decided to improve the pattern further. As with all the other patterns, I only look for patterns found at key levels of support and resistance. In this example, we're looking at a bullish Gartley, and you can see I've noted a key area of support found from the daily or 4-hour time frame. We have price drive down into our key level of support, causing price to rally strongly. We label this X to A. That's the initial drive off our key area. Price then retraces. In this example, we're looking at a 618 retracement, and we'll label this point B. Price then rallies up towards A. In this pattern, it cannot exceed point A. The retracement on this is anywhere from a 38 retracement to an 886 retracement of A to B. We're then looking for price to drive down, having a run down at the lows, and we're looking at a retracement of a 79% retracement of X to A. And the extensions we're looking at from B to C are anywhere from the 127 to 1618 extension. So we're looking for that confluence of the 79 retracement or the 786 retracement with the 127 or 1618 extension. And labeling that, you can see we have X, A, B, C, and we're looking to place a buy order at point D. So this highlighted area, that's where we have the fib confluence, and the stops, the way I trade the pattern, go below point X, and we're looking for a rally to the upside. Let's now have a look at our second patterns within patterns. This is the butterfly completing the Gartley pattern. Once again, we've identified our key level of higher time frame support from a daily or 4-hour chart. Price drives down into our key level of support, and we can see the bids come into the market, driving price aggressively off our level. We can now label this X to A. Once we start to see a retracement, and here again we're looking for a specific retracement of a 62% Fibonacci retracement from the XA swing, we can then start to think about possible Gartley patterns. Now this pattern can set up anywhere from a 5-minute to 4-hour hourly chart, I like to trade it from anywhere between the 5 to an hourly, because it normally gives a decent risk reward on the trade. We now label this once we've got that 62 retracement point B. When we start to see a retracement of the AB leg, anywhere from the 38 to the 886 Fibonacci retracement, we can label this point C. We now have part of the structure formed for a possible bullish Gartley. So what we want to do is we're going to start looking for buying opportunities down here. Now if this pattern is forming on an hourly chart or 4-hour chart, the risk could potentially be quite large. So what we want to do is possibly refine or reduce our risk by looking for a smaller pattern forming. So we have a pattern within a pattern. So let's follow along. Now looking at the BC leg, we start to retrace. And if you start seeing a 79% retracement, you want to start looking for a possible butterfly pattern. Now look at the retracement from C down to this leg. Anywhere from the 38 to the 886 Fibonacci retracement. We're now looking for that possible bullish butterfly to form at the same area that the Gartley would complete at. We can label this X, A, B, and C. So you can see we have that structure. The overall structure looks like a bullish Gartley, but inside the BC swing we have the possibility of a bullish butterfly setting out. And with this setup, we can reduce our risk. So as we went over the bullish butterfly pattern, where we traded at a 127 extension with a 1618 as a stop out area, we can possibly look to reduce our risk. So if we traded a large Gartley on the hourly or 4-hour chart here, the stop would need to go below point X. But if we can try and get in on the bullish butterfly forming here between point B and C, we could possibly reduce the risk, and instead of having a stop below point X, we could have maybe on the larger pattern run sort of the 886 Fibonacci retracement of the XA swing. Now we're looking for price to drive lower, and having a look at this butterfly pattern, you're looking for the Fibonacci projections or extensions, 1618 and the 127 extension, to line up with the XA swing, which would be the 786, and that would set up the buy opportunity right here at point D. So we've got point D of the larger Gartley and point D of the bullish butterfly, all coming in at the same area. So we can get that extra added confirmation that that area is a high probability buying opportunity. And remember, we're looking at that key higher time frames of support from the daily or 4-hour chart. So here, if we label it, we've got the small bullish butterfly, X, A, B, C, completion point at D, inside the larger bullish Gartley. And we're looking for a nice drive to the upside. Let's now look at the bearish crab pattern. As in the previous examples, we're identifying our key support and resistance zones from the daily or 4-hour chart. In this example, we've identified a key resistance zone from the daily or 4-hour chart. Price starts to rally up towards our key level. Here again, the pattern can be found anywhere from a 5-minute up to the higher time frames. I personally like to trade them on a 5 up to sort of a hourly, maybe a 4-hour chart, depending on the risk. Price then retraces, falling short of our key level. On this retrace right here, we look to label it X to A. We're then looking for a retracement of the XA swing, and here again, very specific retracement, looking for a 61.8 Fibonacci retracement. We'll label this point B. We're then looking for a retracement of the AB swing, and that retracement can be anywhere from a 38 retracement to an 886 Fibonacci retracement. We'll label this point C. What we're looking for now is we're looking for a drive higher into our key resistance zone. So there's the drive higher, and what we're looking for is we're identifying this level up here before price actually gets there. You can see we have our extensions or projections. The XA projection or extension is a 1618. That's the key level that we're looking to trade from. And the AB or BC projection or extension, depending which way you draw it, is a 2618 extension or projection. And that forms your tight confluence right inside or at your key resistance zone. And that's the level we want to place our limit sell order with a very tight stop. We're looking for a move back into the range. So that's labeled point D. That's identified as with all the other levels. The point D is identified before price gets to the level. This instance, a sell limit is placed, and we're looking for a move back into the range. Let's have a look at another extension pattern, the crab pattern. It is another great pattern that Scott Carney discovered. Similar to the butterfly pattern in the way that it forms, but uses deeper Fibonacci projections or extensions to find the entry point. These are very powerful patterns and can turn the market to the pip. In this example, we're looking at a bullish crab pattern, and firstly we need to identify our key support zone on the daily or 4-hour chart. You can see price drives down as with the butterfly pattern and gets rejected just before our key support zone. This initial rally we label X to A. We're then looking for a retracement of the XA rally. In the case of the butterfly, we were looking for a 786 or 79% retracement. For the crab pattern, we're looking for a 618 retracement. We label this point B. Once we get the rally from A to B, anywhere from the 38% to the 886 retracement, we label that point C. We're then looking for a drive deeper. Now, as with the butterfly pattern, we're looking at the projections or extension points, but we're looking a lot deeper this time. You can see the pattern drives a lot deeper, finding our key support zone. And you can see if we look at the XA extension, we're looking now at the 1618. So previously we looked at the 127 projection or extension of the XA swing. We're now looking at the 1618 projection or extension of the XA swing. And if you look at the AB or BC extension, we're looking at a 2618 projection or extension. And we're looking at this highlighted area right here with a confluence for the 1618 and the 2618 projections or extensions matching up with our key support zone. And this is the area right here we're looking to trade with a limit order with a very tight stop loss. In terms of stop loss, I like to place my stop just below the key support area, normally identified on the hourly chart or a smaller time frame, so you have a very tight stop, and these patterns either work immediately or we continue lower with a downtrend. You can see we label this point D, and we're looking for a reaction to the upside. So quick recap, we have price approaching a key support zone. It falls just short of the zone and rallies. We label this rally X to A. We then retrace. The important number in this pattern is the retracement of the XA swing. It's a 61.8 retracement. We then look for a retracement of the AB swing. We label this point C, and we're looking at a 38 to 886 retracement. We're then looking for a move down into our key support zone. Remember, this is a level found from the daily or 4-hour chart, and the confluence is the XA projection or extension 1618 with the 2618 projection or extension from the AB or BC leg. And we're looking to place a limit buy order with a tight stop, looking for a move to the upside. Hi traders, it's Andrew, and I just want to show you another example of using patterns within patterns to find high probability trading opportunities. We're currently looking at a daily chart, and what we're going to do is we want to identify higher time frame key levels of support and resistance. So if we have a look at this big upswing from the very low to the very high, take our Fibonacci tool and just draw our lines up. We then take a horizontal support resistance line, we just move it down and see if we can find that horizontal support resistance lining up with a Fibonacci number. So we have nice confidence here. You can see prices retrace off the highs, hit the 38 level and reacted. So it's at these areas here that you want to look for potential patterns. Now prices already reacted off that level, but we can still use that area on the smaller time frames to look for a possible trade opportunity. Just have a look at this area on a smaller time frame on the 4-hour chart, for example. So there's the 4-hour chart. Look at the nice buying pressure coming off this area, and price starts to retrace. So if we draw a Fibonacci tool on this swing from the very low up to the very high, you can see price starts to retrace and then rallies. So if we look at adding our Fib tool onto this swing down, you can see we have an 886 level lining up with a 200 Fibonacci retracement number, which forms the actual bat pattern. So if you have a look at this area now, let's just have a look at this on an hourly chart. Just compress this. So that's the swing that we just saw on the 4-hour chart. Just going to get rid of this eclipse. So we have this buying pressure come off the daily chart, but then start to retrace, comes just short of the 50. You can see the retrace minimum 38%, just shy of the 50, and then we drop down. You see the nice confluence 886 and the 20 that forms the bullish bat. Now you could decide to trade the level right there with a stop loss below the low. You're looking at about 30 points of risk, which is not too bad. But let's just have a look at this area right here on a smaller time frame, and how you can use this concept to really fine-tune your entries. Now if we have a look at what's going on here, you can see we've rallied and then we start to retrace. So if we now, I'm going to move this out the way, if we now draw our Fibonacci tool on this swing from the low up to the high, you can see price retraces down to the 62 Fibonacci retracement number. It then starts to rally. So if we just get this in here, we have a nice little swing up. Remember, our bias is long. We have daily support as well as a 4-hour bullish bat pattern where price is currently trading. So what we're looking for is we're looking for a way to reduce our risk. And you can see price has rallied off that key area of support down here, started to retrace, find support at the 62, then it starts to rally again. Once it starts to rally, draw your Fibonacci tool in from the high down to that low. You can see price starts to retrace, and have a look at what we have setting up right here. We have, I'm going to move this line down, a bullish Gartley on the 5-minute chart, 79 with the 127 extension. So what we'll be looking for is a possible buy opportunity completing at this level, and the risk on the trade with a stop below the low would be about 11 pips. So you can see how we've actually reduced the risk by a third just by trading and looking for a smaller pattern on that 5-minute chart. So if we now put a limit order in, we want to put a buy limit at 56, and we will add, let's make it 59, 56, 59. We're going to add the spread in plus a pip, so it's 2 pips for the spread plus a pip above the level. So we're on 59, and let's just have a look. We may need a slightly bigger stop. Let's say 15. So I'm going to use a 15 pip stop now, just to put it just below the low. So slightly more than the 11, but still very small risk. And place that order and see what happens. Now, in terms of take profits, let's just go back to this 4-hour chart. Remember, this is a 4-hour pattern, so we can definitely look for larger targets. And if you have a look at this area up here, it stands out really nicely. We have an area of support becoming resistance. Have a look there, resistance, back to resistance once again. So that area there looks pretty good, and that's about 100 pips away. So if we target 57.68, let's take a 1.5768 as a possible take profit level. We're risking 15 for a possible target of 100. So let's just go back to the 5-minute chart now and see what happens. So price moves down. Let's follow it along. So you can just redraw this ever so slightly. See, it makes a new high at the 62. So we're still looking at the same level to buy at. Okay, so we've now been filled on the long side. I'm just going to move this up to a 15-minute chart so it doesn't look so cramped. Buy entry was at 56.59. The stop loss just below the low, so 15 pips, and I'll take profit up towards the high. So let's see what happens. Price sits in its range. Now you need to be cautious about moving your stop to break even too soon on these sort of trades. Going nicely in our favor, 57 pips up at the moment. It's going to move to the hourly chart and see what happens. Okay, so price is now moving in our favor, and you can see we've now rallied up and hit resistance and been taken out on our trade. So just have a look at that. We've got taken out for 109 pips for a 15 pip risk. So really nice risk reward on the trade. And once again, we had a pattern. Just delete all this. We had a pattern within a pattern. So we had the big 4-hour bullish bat, and then a 5-minute bullish Gartley form right at the completion area, giving us a very small risk on the trade and giving us opportunity to shoot for the bigger targets. So I hope you found that helpful. Hi traders, it's Andrew, and I want to show you an example of a bullish crab pattern. Once again, you want to identify key levels of support or resistance from your higher time frame. We're looking at a daily chart at the moment, and you see this upswing here. We want to take our Fibonacci and draw it from the low up to the high. So we're looking at the major swings. We then want to take our horizontal support resistance line and just move it down to locate potential areas of support resistance. Now we've come down to that 38 level, and we've bounced quite nicely off that area already. We just have a look a little bit lower here around these lows. You can see price holding a support along the way. Resistance breaks through, becoming support. And it's at these areas here that we're looking to structure potential trades. If we now move over to the 4-hour chart, let's have a look at what that area looks like. You can see price holding very nicely around this level here. Good support. Remember, we're not trying to look for the exact turning point in terms of the level. So what we're doing is we're looking at possible patterns setting up that complete at these areas. That adds to the probability of the trade working out. So if we have a look at the hourly chart, you can see price rallies and then it starts to retrace. So if we have a look at this right here, we draw our fibs in from the very low up to this high. See how price rallies, it then starts to retrace and it comes down and finds support at the 62% retracement. Now, as with the butterfly, we're also looking for very specific retracements. So I'm looking for a 62% retracement for the crab pattern. And we just trace this in for you. So we've rallied off the lows. We've then retraced all the way down to that 62% Fibonacci level. And then we've started to rally. Now once that happens, you want to take your fib tool and you want to draw from the high down to the low. You can see we have a 79-127 extension, and that forms your bullish Gartley pattern. And if that fails, then what you want to look for is you want to look for the crab pattern, which forms further down. So if you have a look at our extensions or projections, there's the 127 that we've been using for the butterfly, and there is a 1618 with the 2618 projection from the smaller swing. So very, very tight confluence, and the tighter the number is to that 62 Fibonacci level, the tighter this number and this number are going to be. So that's the level right there. If we just drop this line down, that's the area of interest that I'm looking to buy at. And if we just move to the 4-hour chart and just move this out the way. So if we now take our eclipse tool and we mark this off, that's the area down there. So you see it's a very deep retracement. Okay, there's the 127 where most of the traders are looking. The 1618 combined with that 2618 is a very, very powerful turning point. And just have a look at that daily chart where that comes into play. See that lining up with the big 50 from the upswing. Okay, so we're getting a pattern that's giving us an opportunity to enter in right at the number. Now with these patterns, you need very, very small stops, because they either work very aggressively or they continue to the downside. So if we have a look at this, I'm just going to compress this and look at this area here. If we use a 40 pip stop and we're going to target up towards the highs here for about 200, so it'll be about 5 to 1 risk reward on the trade. Let's go to our pending orders. Want a buy limit 56. I'll add the spread in. Let's make it 17, and I'm going to use a 40 pip stop on the target. I want up towards the highs around that 58.20 mark. So if we just see what happens now and follow price along. So price breaks down. You see it stalled very briefly at the 79.127, and then it takes another leg to the downside. So we just follow it along. Big spike down. These patterns can take quite a while to set up, so you really need to have patience for them. Okay, so we've now been filled at the key level, and look at the reaction of this area. Once again, have a look at that daily chart, very key higher time frame level, and we get this hourly pattern forming and completing right at this level. So we have an actual method of entering right at this area, and like I said, very tight stop needed, because normally you see price respect this area and should release at some stage. Now the key support or resistance area at the moment is this level right here. That's point X. So if we look at this in terms of numbers, X, A, B, this is the C swing up, and then this is the D completion point all the way down here. So it's quite an extension to the actual pattern completion area. And see how price sort of sits in this area we'll just have a look at the open positions. Currently up about 50 pips. So price hits the resistance, it breaks through, and now we're starting to release. So you can see the actual drawdown on this was very, very small. So you really don't need big stops if these patterns are going to work out. Now you just need to be patient and let the market do its thing. This is an hourly chart, so it's taken quite a while to get going here. If we just move to the 4-hour chart. Alright, so eventually we break to the upside and the target is hit. And you can see the trade, we risk 40 to make 200, so very, very nice risk reward on the trade. And as I said, very tight stop needed on these patterns. You can see price actually continues to the upside. So that's the bullish crab pattern. Hi traders, this is Andrew and I want to show you an example of the bearish base pattern. So the first thing we want to do is identify a higher time frame key levels of support or resistance. We're currently looking at a daily chart, and if we have a look at this large swing down, so from the very high down to the low, I'm going to draw our fib tool for retracement from the high to the low. And if you now take a horizontal line and just move from the top, work your way down, you can see this 50 area right here, okay, where prices actually just hit sort of that area right there. We have the 50% retracement and then this nice level you can see across here holding a support, again a support, now back to resistance. Remember, these are zones that we're dealing with here, so we're not looking at specific numbers, but that's a level there that we can look to on the smaller time frame for a potential pattern. So if we move over to the smaller time frame, let's move to an hourly chart quickly. You can see prices moved up, spiked into that level of resistance. Nice big spike up there. If we move now to the 5-minute chart, you can see the nice rally, prices hit that key level and then it started to break to the downside. Now have a look at this level here. If I just move this horizontal line down, so I can get rid of this eclipse. If we have a look at this level right here, you can see we have resistance, breaks through, comes back, tests support. Remember, we have our higher time frame resistance from the daily chart right here. So my bias is short. Now what I'm looking for is I'm looking for commitment below this level, and I'm looking to sell on a limit order for price. If it does come back to retest, I want to enter short with a stop loss above the high. And in terms of targets, I want to look to the hourly chart for possible targets. So you can see we've got some areas of support resistance. We've got level in around here. You can see it's held a support, resistance, 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 breaks above, tests support again, and we've got this big spike, and then slightly lower we've got this area in here. You can see here resistance, support, breaks through, comes back, test support, test support. So two areas of interest. The first level would put us around 70 pips, second level about 100 pips. So if we go back now to that 5-minute chart, we now want to put a limit order to sell. If you're looking at these shorter time frame patterns, you really need to be paying attention and be pretty quick on this. So we want to sell it at 57.60 with a stop loss just above the high, so 15, let's call it 17 pips, and a target around this 88 area. Just going to add the spread in, so let's call it 90. So in at 60, and we look at 90, so about 69, 70 pips for a sort of 16, 17 pip risk. Just follow along. You can see price now retraces back to the level, and we've now been taken in on the trade. So now you just need to follow along. You can see price moving off that level pretty nicely. Don't be too aggressive with your stop management either. Remember, we're trading a higher time frame key level of resistance, so we need to give it a bit of space to breathe. Currently up about 20 pips. Okay, now we have had a spike down. Our level has been hit, and you can see we've been taken out for 70 pips, and it actually moved down further into the next level. I'll show you that hourly, into the next level of support right there before bouncing. So that's the bearish base for you, found at higher time frame resistance. Hi traders, this is Andrew, and I want to show you an example of what they call patterns within patterns. And again, we're having a look, or we're starting on the higher time frames first. So we have a daily chart up, and what you want to do is you want to just have a look at the larger swings, so from the very high down to the very low. You can see price is trading around the 70.7 retracement. We also, if we take our horizontal line, just drop that down, we have an area, you can see this level right in here, acting as key support and resistance. Support, resistance, breaks through, holds a support briefly, back to resistance, then back to resistance. So we've got a key level that we've identified. If we also drop this down to this last swing right here, you can see from this move down from the high to the low, we've retraced to the 50% and then started to retrace from there and then rallied up to the 886. So if you remember what the bat pattern looks like, you can see we actually have a bearish bat pattern. So we just trace this in. We've had a nice drop, so this is the XA swing down. We've then rallied up to the 50 retracement, then retraced a minimum of a 38% fib level, and then we've rallied up to that key area right there, so 886.1618. and we also have, just have a look at adding that larger Fibonacci swing, 70.7 retracement. So a lot of factors in our favor. Now, in order to trade this bat pattern, your stop loss, we need to go above the high, and on a daily chart you can see that it would be over 100 pips worth of risk, so quite a large stop. So what we want to do is we want to look for a potential pattern at this level on the smaller time frame. So if we now move to an hourly chart, so now compress this up, you can see what we have is a potential head and shoulders pattern setting up. You can see this area here, the left shoulder, the head right into that key level, then we've come off, and now we can look at a possible right shoulder setting up. So if we just take this line down, mark this left equal to potential right, and I'm just going to move this eclipse slightly. So what we have now is a possible head and shoulders pattern setting up inside that daily bearish bat pattern. So we just trace this out. You can see this is the left shoulder, this is the head, this is that completion area for the actual bat pattern on the daily chart. We've driven low, and now we're looking for the right shoulder to form. So we're looking to place a sell limit order up here, and we just put our fibs from the high down to the low, just see if you've got anything lining up. Haven't quite got any Fibonacci retracements there, but be looking up at that left equals right as usual with a stop above the high. So you can see, so instead of having a stop loss of over 100 pips, we have a stop of around 40, let's call it 40 pips, and the target down towards the lows. So let's follow price along. You want to get our order in before price gets there. sell limit at 64, 30, let's call it 34, and I'll put a 40 pip stop. Actually, let's make it 45. I just want to put the order just a few pips below that actual area, and the target I'm going to go down towards a sort of 62.45 area. 45. And place it. So let's see what happens. Okay, so we've just been filled on that left equals to right shoulder. If we just have a quick look at what this looks like on the 4-hour chart. So there's the head and shoulders pattern. You see how price hits that level, drops down, takes out the lows. And if we have a look at that daily, a little bit on the messy side, but you can see this is the bearish bat pattern here, found at higher time frame key resistance. And if we just go back to the hourly chart, right at that completion area we have a head and shoulders forming on the hourly. You can see we've been filled on that, currently up about 50 pips. So looking for a surge lower now, and you can see we've been filled. So just have a look at that. We've been taken out for 189 pips with a risk of 45 pips on that trade. So that's what we call a pattern within a pattern, a daily bearish bat pattern at key resistance on the daily chart, and we had a hourly head and shoulders pattern. We were able to reduce the risk on the trade and look for a good profit potential. I hope you found that helpful. Hi traders, this is Andrew, and I'll show you an example of a bearish crab pattern. We first want to identify our key levels of support or resistance on the higher time frames. You can see we're currently looking at a daily chart, and if we just look at drawing our Fibonacci from the very high down to the very low, you can see we have this 79 level. We take a horizontal line, just drop it down towards the 79 area. You can see this level here holding us resistance, 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 and resistance once again. Look at the rejection in terms of the wicks here. So we identified a key area where price is likely to move or bounce from that area. Now if we move to the 4-hour chart, let's have a look at this area a bit closer. You can see nice rally up, price started to slow down, and you can see the rejection. Look at the big rejection here, starting to move down a little bit. Move to the hourly chart, you can see we have the possibility as well of a head and shoulders pattern. So we just draw this in for you guys. You can see this left shoulder, possibility of the head, and you'd look up towards that right shoulder area there if you're trading the head and shoulders pattern. Okay, so just adds an extra bit of weight to this area. Just want to clear this off. Now if we move to a 15-minute chart and show you what's happening on this area, you can see this is that area we drop off from the daily and continue lower. If we have a look at this swing down on the 15-minute chart, you can see we've dropped, we've rallied, we've dropped, and now we're starting to sort of consolidate. If we draw a Fibonacci from the high down to the low, this is the swing we're looking at here. So if we sketch this in, this would be XA. Price rallies up to the 62. So when price rallies up or retraces to a 62% fib level and then comes back off it, you want to start thinking about the possibility of either a Gartley or a crab pattern. So if we draw our Fibonacci retracement tool from this swing low up to this high, and just trace this in for you. So you can see we've dropped, we've rallied, dropped again to the 79 level, Now what you'd be looking for is you'd look for a move to the upside. So have a look at that 1618 or the 2618. That's the completion area for the actual bearish crab pattern. So we just highlight that. So you're looking about the sort of 65, 70, maybe just a little bit below 69 area, somewhere around there. Nice tight confidence here again. I like to reference the actual 1618 extension over the 2618 extension. So it's this deeper swing down. So if we label it with X, A, B, C, and we're looking for a rally now all the way up to point D. So it's a real deep move to the upside. What I'd also like to look at is this swing down. Just have a look to see where we are in terms of our major retracement levels. So we've got this retracement down, and you can see the 79 level is just above this area here. So as with the other crab patterns, I want a tight stop loss, because what you'll find is when these things work, they work pretty much to the pip. So we're going to look at a stop loss just above the 79 level, which will be about, let's call it 15 pips or so, and our target will be way down here towards this, towards the lows here, around the 886 area. So if we just follow price along here a little bit, we want to see what happens. So price starts to break above these highs. You can see it takes out the 79 level. I'm going to put an order to sell short. So put a new pending sell limit at, I wanted a few pips below here, so the area is about 69. I'm going to put it around 67. I always like to put the order a few pips above or below a level of interest, and I'm going to use a stop of 15 pips. It's going to put us just above the 79 area, and the target I want down towards that 164.40 area. 164.40 is the target on there, so we place that in there. You can see our risk reward is about 127 pips for 15 pips, so very, very nice if it does work out. Once again, just recap, higher time frame key area of resistance. Look at the completion area of this actual crab pattern. So if we just follow this along, okay, so the sell order has been hit. We just go to our open positions. You can see we've been taken in, currently about 15 pips up. With these kind of patterns, you really need to give them a bit of time to start working out. Look at the reaction off that area. Bang! Immediate selling pressure. And the first area you want to watch on these patterns is this level right here. You see this area acting as resistance. This is a level of potential support. You can see it actually bounced off that area about 20 pips before committing below and continuing. So once we get that commitment below, we can maybe start reducing some risk, but I'm not going to discuss the actual trade management just yet. So I'm just showing the actual pattern and how we go about finding it and trading it. So moving forward, you can see the pip count at the bottom there, about 70 pips or so up. Taking quite a while to start moving in our favor. So now we're starting to break down, and you can see we've now hit our target. So let's have a quick look at that. 127 pips from the initial entry down to our target. Just recap that. That was the bearish crab, found at key higher time frame resistance from the daily chart. Remember, we're not just trading a 15-minute pattern, it's the actual area, the completion of the pattern, that is the important part. Hope you found that helpful. Let's now look at a bullish godly example. We first want to find higher time frame key levels of support. Looking at a daily chart, you can see we've had a nice move to the upside. We then started to retrace. So if we draw our Fibonacci tool from the low up to the high. We're looking for some confluence, and you can see around this area right here, you see the area of support becoming resistance. So if we take that horizontal line, just drag it from the top down to the bottom, you see this area right here, 70.7 Fibonacci retracement, lining up with this area here. Again, reference that last bearish candle before price explodes to the upside. So that base right there, that's the most important reference point in terms of the support resistance on this last leg up. So we've got a nice bit of confidence. Remember, these are zones. Okay, so you can see on the daily, although it's about 35-40 pips apart, they are zones, and we're looking for patterns to actually confirm that that area or zone is holding. So we now move to the smaller time frames, and I'm just going to move to the 15-minute chart. And you can see we have price drop off and then hits this key level, and it starts to rally. So once it starts to rally and retrace, you want to start looking for possible patterns. So if we draw Fibonacci from the from the low to the high, you can see price retraces and it just pops through that 62 level. So we could start to think about the possibility of a Gartley pattern setting up. So if we just trace this in, we've got a swing up which is labeled X to A. We then retrace in point B, and once we get this retracement, it starts to retrace on this move up. Draw your tool from the high to the low, and you're looking for confluence. Now that's 79,127 extension area, about 6 pips apart. Okay, you're not going to get the exact sort of textbook look-alike in the market, so you need to be able to give it a bit of leeway in terms of looking for, you know, that perfect setup. The price starts to retrace on us now, so we have this rally up, X, A, B, C, and now what we're looking for is we're looking for a buying opportunity around, I'm just going to move this level up, the 79 area, and you can see around the 34.41, nice little base in here as well. You see this last little blue candle before price moves to the upside. So I want to highlight this area right here, and remember our stop loss is going to go below the low, so you're going to look at about give or take 25 pips, somewhere around there, and target, we'll just shoot for the highs here, so look about 25 plus for about 67, somewhere around there. So we're looking for a move to the downside, and that's essentially a bullish Gartley for us. So if we go to our orders, pending orders, new pending order, and we want a buy limit, and if we just put this in 34, and I'm going to add the spread, so I'll put 43 plus 1 with a stop loss below. So I'm just going to go around 30 and see where that goes. We can move it up a little bit. So okay, so 34.16, and a target we're going to go for around this 35.10 area. Just sort of select 70 and see where we go. So around about this high here where that 886 retracement is. So we place that in the market. Here again, set your alert. So if prices hit the level and you're not at your desk or you're doing something else, it alerts you to what's happening. And if we just follow this through, you can see we get spiked into the level. Look at the immediate reaction. If you just look at your open orders, really 14 pips up on the trade. Okay, so it's very important to have those limits waiting in the market. Now you just need to be patient and wait and see what happens. So up about 40 pips. Now depending on how you manage this, you could reduce risk on the trade or get to break even, or you could just leave the trade open and shoot for take profits or take partials. There's so many different ways of doing it. I'm just going to leave it really simple for now and leave the stop where it is and look for that target. Okay, so you have a bullish Gartley here, and we're now starting to move to the upside. So we've just been taken out. Nice little pop up there, and if we have a look at the account, we can see we made 66 pips on that trade. So We just recap that. From the daily chart, we found the key level of support, higher time frame support, 70.7 Fibonacci retracement, with a nice base of support becoming resistance, back to support, and then on that 15-minute chart, we had a nice bullish Gartley form, enter with a limit order, target was up towards the high. You can see price moved a little bit further from there. Hope you found that helpful. Hi traders, this is Andrew again, and we're now going to look at an example of a bullish bat pattern. So first things first, we want to identify key levels of support and resistance on the higher time frame. We're currently looking at a 4-hour chart. I just want to compress this quickly to show you the market environment. In a nice uptrend at the moment. Prices retraced and then rallied. And if we just zoom this up, if we draw our Fibonacci from the lows up to the highs on this 4-hour, you can see price actually retraced, initially came down and found support at this level right here. You just take your horizontal tool and drop this down. You can see price came down to the 50. Look at this area right here, resistance, support, support, find support, and then it rallies up to new highs. We just adjust that fib now that we've made those new highs, and you can see that area right there, price has proved to us that the levels held and aggressively moved off this base around the 38.78 area. So if we move over to a smaller time frame, I'm going to go down to a 30-minute chart. What you want to look at, I'm just going to adjust this fib level here. This is that swing from the 4-hour. That's the key level right there, that 38.78 from the 4-hour chart. Look at the buying pressure in the market. Nice move off. Now, what we're going to do is we're going to draw fibs from the low up to the high. Okay, and that you can see is our aggressive move off our key level of support. Now, just follow along and see how price moves from here. Once we hit the 38 level, we can now start looking for a retracement and a possible pattern. So depending on the retracement of the XA swing, so here's your X at the bottom, there's your A at the top. Depending upon the actual retracement, if it's a 38 to 50, it's a possible bat setup, and if it's a 62%, then we're looking at the Gartley around the 79 level. So if we take our Fibonacci tool and we draw it from the high down to this low, just follow and see what happens. Remember, we need a minimum of 38% retracement, so here we didn't make the 38 level, so you just need to follow it along and see what happens. So you can see now we've come just through the 50 level, but we haven't quite hit the 62 or 618. Now have a look at the real tight confluence here, the 886 and the 1618 extension. That forms your bullish bat pattern. So if we now draw this in, so there's the drop, initial rally off our key level of support, X to A, we then retrace down to point B, and then we rally. You can see we're currently sitting around the 50 level, so we need a minimum of a 38%. We're currently at the 50, so that's fine. Now what we're looking for is a move to the downside. Okay, once price starts to retrace, we want to look for a possible buying opportunity down here towards the 886 level, and that's around 38.72 area. Okay, so we can highlight that like such, and what you can do is put a limit order into the market at this area. And what I like to do is then set my alert, so if I'm not at the computer or doing something else, I can come back and check up on this. So first things first, let's go into our orders, pending order. You want to place a buy limit, and the level we want is 38. For buy, you want to add spread, so I'm going around 75. Okay, we're dealing with anyway from a pip to 2 pip spread, so around 75, a few pips above our level, and a stop below, so around 38. Let's try 38.50. So try 20 pips and see what happens. Okay, so we'll do a 25 pip stop. So in at 75, stop at 50, and target I'm going to go towards the highs around the figure 140. And that should give us a decent risk reward on the trade. So we place that in. With the back patterns, you want to place your orders and be aware of these patterns pretty quickly, because this leg down towards that D point can be very aggressive at times. Let's follow along and see what happens. Okay, so we've now been filled at this area right here. You can see our position. We're filled at 38.75, stop loss at 38.50, so 25 points of risk, or pip of risk, and the target we're looking up towards the highs here, about 125 pips. Okay, so really nice risk reward on these trades. Let's follow along and just watch price carefully. Remember, as with the other pairs, be careful about moving risk out of this too quickly. You can see we had a spike up on this, almost 90, just over 90 pips actually. So it's going to be your choice in terms of targets. As I said, we will go over the targets and take profits, etc. in the next section. For this example, we're just going to follow price along. You can see price comes right back into this area for some more orders, and we're still looking for price to pop higher. Alright, so now we're starting to release to the upside, and you can see we've just been taken out. So our trade, you can see 125 pips for 25 pip risk, and that's your bullish bat pattern. Remember, the key thing here, found at higher time frame support level. Hi traders, this is Andrew, and I just want to show you what to look for in terms of the head and shoulders pattern. So first things first, we want to identify a key level of resistance from your daily or 4-hour chart, and you can see we're currently looking at the daily chart here. You want to look at the major swing, so from this swing high down to this low, that's what I would call a major swing, and you want to draw your Fibonacci tool as we show you in section 2. And you can see price is currently around the 38% level, so it's around these areas here. If we just take a horizontal line, drop it down, 38 level, it's around these areas here that you want to start looking for possible patterns. See at this 50 area as well, we've got an area of resistance here becoming support, also something you want to watch. So if we just move over to the 4-hour chart now, maybe we can fine tune the level slightly. Here again, you look at the swing down, that's the major swing, and you see the 38 level, nice resistance, holding. So it's around these areas here, you want to look for a pattern. Alternatively, if you look up, have a look at this block right here. This is the area, remember we referenced that in section 2, fine tune your entry. Just zoom this in, this is what you want to be looking for. See this consolidating area here, and price takes a nice plunge down. Reference this area, that last little white candle in that block before we really release to the downside. That's a nice little order block sitting there, and you'll have orders starting to stack up around that area. So here again, you could choose to use a limit order there, but as I showed you in this course, we're looking for specific patterns. Okay, so once we've identified our key areas of support and resistance from the larger swings, higher time frames, just mark these areas off. Okay, so we can mark this area here. You can see prices already hit the level here, so if there's no pattern forming there, you want to start looking slightly higher up to your next area. So these are the two areas we want to pay close attention to. And if we just have a look at the hourly chart here, we just step this forward, you can see price comes up to the area, stalls out. So these are the areas here, you see 38 and that resistance. These are the areas you're looking for, those patterns. Okay, so we've now spiked through the 38, coming up into that next area. Bang. Alright, so there's that area that we marked off from the 4-hour, that order block being hit. Nice rejection here. So now it's just a matter of looking for a pattern. So I'm going to just remove this eclipse. You can see that area, the 50 and that resistance area being hit. So just wait for some sort of confirmation in terms of patterns. Here we're going over the head and shoulders pattern and what to look for. And I'll just zoom this up. So you can see price breaking down, and you can see this formation. We have a nice push up, take some orders out as explained in the example, drops lower, and then we have the spike up into our key area of resistance from that daily chart, and we start rejecting. You see how we take this low out right here? So what you want to do is you want to reference this point on the left hand side. Okay, so if this is the left shoulder, you can see how we have price shifting up nicely. We then have this drive deeper, picking up those orders at that key area of resistance. Now we've broken to the downside. You can see how we've cracked this low, and if you draw a little trend line in here, you can see we find support along the way, break, actually retested the area very briefly and then dropped. So we're now setting up for a possible head and shoulders, and the most important level for me right now is looking across to this left shoulder, so that we have a left equals right. We can draw fibs into this, but the most important number for me is this area. So if we just put our eclipse across here again, you can highlight these areas because these are where you want to start looking for limit orders to be placed. Draw some fibs in here. Now get rid of this trend line, and this is the area here that we're looking to place a trade. So let's move it forward slightly. Alright, so once price starts to break up towards that 38, so getting ready to put an order in, what I want to do is I want to look to sell it about a pip or two just below this swing high. The high is 23.27. Initial stop's going to go above the high up here, so it's going to be quite a heavy stop, and it's quite nice if you are working full time or you just want to swing trade these things. You don't have to be in front of your chart all day long. Okay, these patterns take a good few days to set up. So what I want to do is I want to place a stop just above the high, and I'm going to target the lows here, about 100 points give or take. So if we just go in to our orders, new pending order, we will discuss orders in the next section where we go over specifics of entry, stops and take profits, so don't be too worried about that for now. So I'm going to put an order in at 23.25, like 2 pips below this swing, just in case we miss it, and a stop loss above. So we said what about? Just move it down to or up to 60, and we can add, let's say 65. So just above the high here. You could even go as high as 70. So about 70 points of risk, and I'm going to look at targeting down towards the lows. Now the take profit is going to be up to you. Like I said, you can go for 1-to-1, you can go for the old lows or the extensions. It's really dependent on the market environment and also the type of trader you are. So targets 22, 25 area, go down towards these lows, maybe a few pips above that, maybe let's say 30. Place that in, and here again you can set your alert. So we're looking about 90, 95 or 70. Okay, to start the trade, and we're looking for a move to the upside. So if we just draw this in, we're looking for that move up and then that drop to form that head and shoulders. So we just move this forward. Remember, if price breaks the lows, you'll just need to redraw your fibs on this swing down. But we've identified a higher time frame key resistance area. Alright, so we've just been taken into the level, and it's very important to place your orders into the marketplace like this in a limit order. We try and chase this. You can see price hits the level, and already we're 11 pips up. So we just follow this along, Now obviously depending on the type of trader you are, you can look to reduce your risk on the trade if you want to. For this example I'm just going to leave it as is and just shoot for our target down towards the low. So you can see if you'd move the stop to break even already, you were up about almost 50 pips on the trade, and prices obviously had a rally back up. You see how it moves slightly deeper, just filling some orders just above the level. So you're looking for that continuation down now. And these patterns can take a while. This is an hourly chart. Alright, so there we've had that nice release down into those lows, and we've just been taken out. And you can see that was worth 95 pips on the trade. So nice little trade. And here again, structured from a higher time frame, key resistance area. So there's the pattern, left shoulder, head, right shoulder. And we're looking to play the right shoulder on a limit order. Stops above the high. This is the way I like to trade it. Targets, like I said, old lows or the extensions. Old lows are very reliable, especially with these patterns. So just a quick recap on that. We identified key resistance from the daily or 4-hour chart. This is the 4-hour swing down. There's that order block that we reference right there. Pay close attention to that area. Price spikes up, hits the level, releases nicely, and then we get that hourly head and shoulders pattern where we're looking to trade that right shoulder, anticipating that right shoulder. So we get the left and the head forming. This low gets taken out, price rallies, limit order set in. You can see price sits here for a good few hours and we get that nice release to the downside. And we just follow price along. You can see price starts to find support at these lows. So a good place to be looking for profits. And you can see if your stop was at break even, you would have been stopped out. Alternatively, you can see price actually runs towards the highs here, just above the highs, filling those orders, and we release to the downside. So it's just the way it goes. Good place to watch those lows or highs depending on the pattern. Hope you found that helpful. Right traders, let's now have a look at an example of a bearish bat, and we're currently looking at the 4-hour chart. So the first thing we want to do is look for higher time frame key levels of resistance. And if we just have a look at this sort of market here, you can see very choppy price action. I just compress this for you. And what we want to do is you want to look at the major swings. Okay, so from the very high here down to the very low is where you want to look to draw your fibs. So we draw the swing in here. You can see price is retraced all the way up to that 70.7 area and released to the downside. So if you just take your horizontal support resistance level, just drop this down, you can see this area in here where price is held previously. We have resistance, support, for sort of support there, holding as resistance again and again, and then we come back to the area. And if you have a look at the level just below that, look at that 62 area, also a very nice clean level of support resistance. Remember, they are zones, so we're not looking at specific numbers. And you can see we're dealing in around 30 pips, somewhere around there, 40 pips in range. So that's the area of interest, that's the area of resistance. So you can mark that level off there. And what you want to do is, in a market environment like this, you can look to structure trading opportunities or patterns inside this range. If we now move to the hourly chart, you can see this is the rally. Look how clear it looks on the hourly chart. This is the release, nice release to the downside, nice selling pressure coming into the market, and then price starts to retrace. So once we get this initial move down, just zoom this up, we can look to label this the XA swing. So there's the Fibonacci swing down, and if we just draw this in here, that would be the X, that would be the A. Then price starts to retrace, so we can see we rally up to the 38, retrace a little bit, rally up just past the 50 and start retracing again. So if we draw a Fibonacci from the low up to this high, you can see we have the 886 lining up with the 1618 extension. Now that forms your bearish bat pattern. if we just highlight that area right there, so that's the level of interest to us, and we just move this line here, you can see that's 62% and the 70.7 from the 4-hour chart coming in play on the left hand side. Just adjust this line, so there's the 886 level, and that's the level that you want to be looking to place your limit sell order. So if we trace this pattern in, you can see we've dropped nicely, we've rallied up just past the 50, now started to retrace again. And remember, on this initial retracement here, so we've got the X, A, B, C. On this C retracement, you're looking for a minimum of 38%, and you can sort of go down into the 886. So that's kind of what you're looking for. And what we're looking for now is we're looking for that move to the upside. So we just follow price along. You can see price spikes up like this. Have your order set, okay? Have your order set. So what we're going to do now is we're going to go to the pending order. We're going to put an order to sell right up at this 886 area, which is at 43.67. We'll put it at 65, a couple pips below, and we're going to put a stop loss just above the highs here. So 30 pips. Let's go around 40 pips should do the trick. Okay, if the price takes the highs out, the pattern becomes invalid, and then you obviously want to be out of the market. And targets, again, we'll keep it simple. We'll go down towards this 886 area, around the 140, 140 area. Okay, so we'll put that in place. So we've got a sell limit at 65. Targets about 220, 24 pips for risk of about 40. So very very nice risk reward, and that's what's going to the bat patterns. They're very good at doing that. Okay, because the stop goes, as with the Gartley and the head and shoulders, goes above the highs or point X, and the targets, like I said, the lows are pretty good places to take profits. You can also target the extensions. So let's just follow along. Okay, price has now filled us in this this pattern or this trade. You can see our pending order currently 8 pips down, currently 24 pips down. You can see stop above the high, so if you run into trouble, price continues to the upside, you're out of the trade. Okay, so now price is starting to release to the downside. Be careful not to move your stop to break even too quickly. Price is now starting to break down nicely. You can see if you'd move your stop to break even, having been up 50, almost 60 pips, you would have been stopped at break even. So just be very careful about that. You need to give the market time to breathe, because you've actually just taken the highs out. You almost hit the stop loss. Alright, now we're starting to break down. You can see we take these lows out and actually close below the lows. Currently up 75 pips. Here again, you can move your stop to break even when you start hitting these key areas. You see this area of support in here. If you want, you can move stop in there. We will go over and discuss the actual trade management side of things. But for now, we'll just keep it really simple. You can see we're up 172 pips on this one. And price is now sort of finding support down towards the lows, and we've just been filled on our take profit. So 225 pips. You can see it just took over sort of a day here, but that's the bearish bat pattern. Here we can find a key resistance. Price comes up, hits the level, starts picking up the orders around the area. It takes a while to get going. Okay, very common for it to do that, and then we see price release to the downside. So that's just your bearish bat